Hi, everyone. Warm welcome from my side. As I was introduced, my name is Balazs. I'm one of the co-founders of Power Capital. And today I'm going to talk about something different than what was previously discussed and more coming from the traditional fintech side, but I will also tell you kind of my history of how I got here over the last 5 years and what I really mean by supercharging fintechs and what is really crypto as a service. So I guess to start off about myself, I've started initially in crypto in 2012, but more heavily since 2017 is when I started my first company, Herdius, and we were doing interoperability for decentralized exchanges in 2017 out of Berlin. So that was really early days when it comes to building crypto tech and building in DeFi. So over the years, kind of we built everything from pure interoperability to more decentralized exchanges. In the last year, more DeFi. And all this time, I always wanted to kind of bring crypto and DeFi closer to traditional fintech. And that's what kind of we are doing since earlier this year with Pile Capital. We are backed by really amazing funds, also W3, and a lot of really great fintech founders. And with Pile, what we kind of realized, and I think a lot of discussion today has been going on about where's the next wave of crypto native users are going to come from. It's my hypothesis and my idea that they're going to come from the fintechs. And why I think that is, a lot of fintechs are locked in this feature sort of race. If one of them has a certain kind of feature, the other one has to have it. But there hasn't been a lot of innovation going on, especially when you compare it to the pace of DeFi and crypto over the last 2 years. I mean, think of Uniswap, think of Compound, think of Aave. Now that we bring this up, there's a new version of Compound protocol. And then think back of what has changed in core banking over the last 5-6 years. Branches are gone, but that's all. So we really feel that all these different fintechs are kind of locked in this feature race. But we also see the push from Gen Z, who's growing up in NFTs, they're growing up in crypto, that they want their financial apps to be super apps of sorts. They want to be able to buy crypto at their traditional digital bank. They want to buy NFTs. And we see this push from that side that those are the aggregators where the new wave of users will come from. Because crypto is a new payment rail, and it's not easy. I'm the CTO at my current startup. I'm also a developer. And it's been literal hell to integrate and work with crypto protocols a lot of times. Just to give you an idea, there's usually no sandboxes. Testing is really hard. And a lot of the fintechs are facing the same challenges. If you want to integrate an NFT marketplace, you need expertise. If you want to do access to DeFi, you need auditors. If you want to at any certain point or level, kind of dip your toes into crypto, whether you're fintech, whether you're a traditional company, a lot of times you need engineers who are really expensive. You need talent. And most of this talent works in the crypto space rather than in the traditional space. So that's what we are kind of figuring out with crypto as a service. What's crypto as a service? It's actually a term we made up 4 months ago when we did our funding round, but now if you search it, there's a lot of hits. And crypto as a service is really delivering the end-to-end infrastructure for fintechs or any kind of banks, financial providers, so they can really easily integrate the whole field, in a matter of days. Because what we kind of saw is, like I said, lack of talent, lack of testing, lack of knowledge is a huge kind of problem in this space. And if we take a step back, in traditional financial apps, you have buy, hold, and sell. Let's say Revolut. Let's say your typical Trade Republic. You can go and buy crypto as you wish. But a lot of times, and that's where we go one step further with crypto as a service, you cannot access DeFi. It's a regulatory issue. It's a matter of implementation. It's a security risk. So that's kind of the 3 products that we deliver as of right now. We do yield as an API, which means any sort of neobank can plug into our backend, and we can deliver positive interest to their end customers as they wish. Sometimes these rates can be up to 8%, but usually now we see more like 2 or 3%, and it's also, of course, up to the end customer to choose where they deploy their money. With the Yield API, we're plugged into 18 different crypto protocols. So the usual Aves, Yearn, Maple, Uniswap. So you can even take out a Uniswap position. So we provided like a really comprehensive coverage for them on the crypto side. We also do borrowing. So for some use cases, some fintechs have a model where they need to borrow based on collateral, or they want to provide crypto credit lines to their end customers. So that's something we also support. Then the last piece is, I guess, the trade API. So usually, like I said, the fintechs have buy, hold, and sell, but sometimes it's still a regulatory issue to allow trading for their end customers within their own interface, for them to do so. And this is also something we deliver to decentralized finance. So we're plugged into different protocols, and we do the whole trading and the infrastructure for them. Why are we doing this? And how are we pitching this to fintechs? Or how are we pitching this to financial institutions? We tell them, and this is actually a study from last year from Revolut, is once they integrated crypto, they saw a new revenue channel open up. They saw 3 times the increase in their margins and profitability. Because this is also what we also tell fintechs. Crypto is a great revenue channel. Every fintech is usually losing money, especially if they're consumer focused. So why not integrate crypto, integrate yield, and open this new channel up for your own users, but yourself as well? Because let's just take, we had a great talk from Binance, for example, but we can also give another great example in Coinbase, that they built not a monopoly, but a great product focusing on consumers, and they're making a lot of revenues from the different trades and the fees. And it's also what we see, and a lot of fintechs have been super open to it. Actually, one of the major markets we're seeing this is Latin America. Why Latin America? It's even more so more crypto native crowd. And of course, they have a lot of uncertainties on currencies and so on. So they really want this, especially Gen Z neobanks really want crypto. They want NFTs. They want these products to be present within their fintech apps. And what's kind of next for us as Pile? Where are we heading? Self-custody as an API is one of the things that we actually put on testnet this week. What's self-custody as an API? Usually, if you go to some fintech and you buy crypto, that crypto is deposited at some custody solution, some custody provider who's usually licensed to perform custody activities. The problem with that, and it goes against the whole idea of decentralization and crypto, you don't control the private keys. Those assets are safeguarded, let's say in a safe or in a bank, but they are not your keys. They are not your assets. If someone were to hack this bank, your assets are stolen and gone forever. Self-custody as an API basically gives you, within the fintech's interface, the right and the control over your assets and the private keys. To give you a concrete example, if you have a fintech neobank in Germany that we are working with and we provide them with our self-custody wallets, you can buy crypto, but you know that you own it. So at any point you can take it back, you can send it wherever you want. The fintech doesn't own it. We as Pile don't have access to it. It's all yours. So you're in custody. The other problem we also saw, and this goes back to bridging crypto and fintech and traditional finance. What we also saw a lot of times, and I think a lot of the speakers here, especially in the NFT space, can also tell you a lot more how on and off ramps are super painful for crypto. To give you an idea of what on and off ramps are, in crypto, on-ramp is when you go from euros or fiat currency into crypto, and off-ramp is when you go off. So you convert your cryptocurrency back to fiat money. The problem is that the costs are insane. For platforms who are selling NFTs, for platforms who have different yield products. We saw actually Peter also yesterday speaking here as well. Some of these providers are charging the crypto companies who are enabling buying crypto or NFTs 3% for every transaction. You can imagine that's a huge tax when you're entering the space. We cannot call crypto or DeFi a new payment rail if it costs 3% to come on board and 3% to come off. So that's one thing that we are also solving for at Pile. How do you make the connection and the bridge between traditional money, traditional assets, and crypto seamless and free of charge? So we are building the on and off ramps at scale, not only for the consumers, but also B2B. Why B2B? Because there's no solution out there as of now. if you're an asset manager, if you're a company in Germany, let's say, and you want to buy 1 million of USDC or 1 million in stablecoin on some platform, there's no solution that exists for you. You can do the KYC, the KYB, AML checks, but there's nothing that really scales. And that's really something where we see as our job to solve for. And lastly, it's also better FX. It goes back to what I explained with yield as an API. What is yield as an API? Yield as an API for me is sort of like a money Lego. You put money into this yield API to earn interest for a certain period of time. You take it out, and then you have, you already have the interest accrued. Because one thing in Ethereum that's really different from traditional banking is when we talk about interest, let's say 2%, 3% annually on your assets, the interest accrues every 15 seconds versus monthly for a traditional bank. How can we plug this into FX or foreign transactions? Is we can take your euro transfer, let's say you're transferring euros from here, from Germany to the US into USD. We can take your money, put it into our yield API for 12 hours, have it earn interest continuously, and then in the end do the payout on the US side. And through this, we can get a much better rate than the competitors like Wise, Currency Cloud, all the other FX providers that are providing you with the mid-market exchange rate. So that's really briefly it. I hope I could give you some insights on what we are doing at Pile. That's my LinkedIn over there. Please keep in touch, and if you want to build on the intersection of finance and crypto, please do reach out, because we really want to change things. One of my co-founders, Jessica's, funny saying that I kind of borrowed is that a lot of banking as a service is putting lipstick on a pig, or a lot of fintech is putting lipstick on a fig. I think for us, we really want to change things, bring these two worlds together, bring NFTs into the picture potentially, but our core goal is to really innovate in Germany across these new payment rails and across Europe as well. So thank you so much, and come catch me after the talk if you want to chat. Thank you.